Hey everyone, my name is Aditya Sai Koneru, and I'm a current engineering honors program student who recently completed his capstone this semester. This is my video presentation on said capstone. And let me just open up my presentation and we can get started. Okay, perfect. So my capstone project was about machine learning for predicting price movement of stocks. My mentor was Dr. Romesh Saigal. Once again, this is part of the engineering honors capstone project program. So getting right into it, here's a quick overview of all the topics that I'll be covering regarding my project today. So first up is the background and the significance of the project. Then I'll talk about the hypothesis and our methods, and then our results and further studies. Finally, I'll wrap it up with a couple of quick acknowledgements. So introduction. Currently, over 80% of the stock market trades are from automated systems. With the rise of systematic trading and individual investing, there is significant opportunity to apply novel machine learning techniques to the space. Since stocks are so incredibly volatile, even the slightest advantage in predicting their movement is helpful for financial analysts and real-world traders. The purpose of this project is to design and test various machine learning algorithms in predicting price movements of an asset. To simplify the problem for feasibility purposes, my goal was to accurately predict whether or not the exact percent change of an asset's price for the opening price given the closing price of today and the last 50-day look back period. So in terms of the financial background that is required to understand this project, basically, it is important to understand a couple of the core principles of how real world professional traders currently value assets, as this translates a lot to my project as well. In terms of the financial information that I use, I specifically looked at what kind of financial technical indicators were heavily used in the real world today. Basically, technical indicators are a variety of metrics which reduce price trends and patterns into single values. Each indicator focuses on a different aspect of price trends. In the picture shown, this is an example of the EMA indicator. EMA stands for exponential moving average, and essentially a momentum indicator that tells you the underlying price trend of a stock. So it kind of starts to tell you when the underlying trend is in when a price will rise or fall before it actually occurs, because you can kind of just see the overall average start to break. In terms of the neural network background that I used, it is really important to understand how recurrent neural networks work for this project. Essentially, recurrent neural networks are a subclass of neural networks that are pretty much hyper-tuned for time series analysis. This specifically is the LSTM cell. The LSTM stands for long short-term memory cell units. Essentially, they're a type of recurrent neural network which I used. Each LSTM node has 3 gates: the input gate, forget gate, and output gate. And all 3 of these gates are highlighted in this diagram. Essentially, the input gate recognizes which portion of the input to accept. Forget gate learns to delete irrelevant pieces of information. And finally, the output gate learns how to combine the other portions of the layer into like a proper final output for the cell. And once again, here's the visualization. Essentially, in an LSTM layer, the output of each cell becomes the input of the next LSTM cell. So this is kind of like a step back view of how the layer is constructed. And as you can see, each input from the left cell flows into the right cell. Over time, these long LSTM layers are able to learn underlying trends for time series data, just because that's kind of like what recurrent neural networks are hyper tuned for. So in terms of our actual hypothesis and methods, we hypothesized that using an LSTM architecture along with financial indicators, we will be able to accurately predict the opening stock prices. So what was our actual algorithm architecture? So first I started off with kind of just exploring how an LSTM layer would work. Since LSTM layers have already been used significantly for time series analysis, I wanted to see how this kind of translates to financial stock markets. So my first kind of intuition was to take a 50-day look back period, which essentially the price history of the last 50 days for an asset and feed it into an LSTM layer. So this is the bottom portion of the diagram here, where it says 50-day look back period and feeds into this orange cell that's this LSTM layer. So once I only did that portion and kind of focus on how a recurrent neural network will work with financial data, I realized that this was probably not the best way to go. I was essentially focused on solving this financial problem with only computer science theory. What I realized was although like the results looked all right at first, I realized that pretty much the algorithm was learning to take yesterday's price, slightly modify it pretty much almost randomly, and then kind of spit out some output. Since the difference between yesterday's price and the price we're trying to predict is so like kind of minute, our mean squared errors and like other metrics seemed very, very accurate, even though it really wasn't actually learning an accurate prediction, but rather just randomly moving yesterday's price. That's when I kind of had to kind of focus on how to incorporate the financial data that a lot of professional traders use today. And this kind of comes in with the dual branch that's listed on top. So this branch on top here essentially takes in a list of financial indicators and their values for those metrics and sends it through a series of fully connected layers. The goal here is for the financial indicators to provide kind of more context over the actual price, the underlying price trends over the past 50 days. So once the LSTM layer on the bottom outputs some sort of prediction for tomorrow's opening price, the branch with the financial indicators will then kind of, based off of the indicator values, adjust that prediction from the LSTM layers so we can have like a more accurate output come out on the right side. So once again, to reiterate, this dual branch system has one branch focused on the recurrent neural network side and the other branch focused on the financial technical indicators. It then concatenates both of these outputs and then feeds it through one more fully connected layer, so such that there's a single final output, which is the predicted opening price of the asset tomorrow. In order to test the algorithm, I had to generate a basic kind of trading simulation. Essentially, this simulation was to test the capabilities of our prediction in like a full live paper trading model. We employed a fundamental strategy where we basically essentially just buy low and sell high. Once we kind of predict the opening price for tomorrow, if that prediction percentage is significant enough, as if, for example, if the price is expected to spike over 3% tomorrow, we'll simply buy, and if the price is supposed to drop significantly, we'll sell the asset. In order to kind of maximize our portfolio, we tried to also establish this kind of extreme significant buy order. Essentially, if the price is supposed to spike significantly, so let's say by 10%, which is usually pretty unprecedented, we tried to max our portfolio such that we would buy the asset with 100% of our portfolio, and then sell it as soon as it starts to drop, in order to kind of throw our full weight behind our prediction to really test the rigor and the reliability of the predictions that we were generating. So now for our results and our further studies after this. In terms of our actual results, our prediction results were fairly accurate. As in this diagram on the right that you can see, the orange line is our prediction line, where we're trying to predict the next price every single day. And the blue line, which is a little bit harder to see, is the true price. The reason that it's a little bit harder to see is because these lines are so highly correlated, they're pretty much overlapping for most of the time. So the average mean squared error of this prediction line was 4.327. In terms of our actual, in terms of our actual simulation results, the average return on our investment across a 2.5-year look back period was 356%. To give more context, essentially we gave the algorithm an initial starting number of assets at $2,500, and the algorithm returned an average profit of $8,900, or about 356% across the 2.5 years that we looked at. So the model would train from 1990 to 2017, and from 2017 to 2021, which is the graph you see on the right side here. It would pretty much try to live trade based off of the parameters that I learned from those initial 20 years of testing. The results of the study overall show that using an LSTM-based algorithm provides reasonably accurate predictions. However, more research needs to be conducted to expand this algorithm to a real-world trading system. In future studies, we can explore the use of Bayesian networks to better understand the margin of error and confidence levels behind each prediction. This would help provide more depth to the current binary approach in the simulation. Another potential area of exploration is diversifying the set of indicators and potentially increasing how many are actually included to provide the algorithm with more information. And with that, I just want to have a couple of acknowledgements before I wrap up. First and foremost, I would like to thank the Engineering Honors Program for providing me with this opportunity to pursue this specific strain of research. Next, I would also like to thank Dr. Ramesh Saigal for providing guidance and supporting me throughout this project in a mentor capacity. With that, that is the end of my presentation. So thank you for watching, and I hope you guys all have a good day. Thank you.